So Ledges, it's been a long time. Actually, it's been 2.5 years since I last did this. So welcome to Edges for Ledges 2024, the nuclear edition. I'm calling it the nuclear edition because whilst I'm holding this event and streaming 4 days a week, I'm also running an international trading desk for a proprietary futures trading firm and trading my own book for them. So there's a lot going on. They weren't actually that keen, by the way, on the idea of me doing this, but I had it written into my contract with them that I could. Some of the firms I've been at over the years take the proprietary edge of their traders very seriously and don't like you putting it out there, but they know that I've got a history of teaching, so it's cool. For those of you that don't know me, and I imagine there may be a fair few in here, I'll just give you a very brief background on how I trade. I trade two strategies. I trade a swing strategy, which is not what everyone probably thinks of as swing trading. Most of the positions I take are closed out the same day, very few being held overnight. But I'm not holding trades for days on end, even though I'm calling myself a swing trader. And I trade this strategy across multiple asset classes, which include Forex, equity indices, commodities, and BTC too. I'm also trading a short-term strategy, which is where I focus on just one market. It's my primary market. It's the German 10-year government bond. It's traded on Eurex. The code is FGBL if you've got TradingView and want to follow along with what I do in that. But to put things very simply, no matter whether I'm short-term or swing trading, I'm looking for a higher time frame bias using weekly or daily charts, and if I can establish a bias, then I will look for a trade naturally in the direction of that bias. Sometimes I will be able to find a clear level to do business at, and I'll leave an order in at that level, and sometimes I'll want to watch the price action as it trades into the level rather than leaving an order in and just seeing if I get filled on it. And of course there are times when I can't establish a bias. I'll look at the higher time frame charts, I'm somewhat neutral on the market, but I can see levels away from market, either above or below, that I'd be prepared to look for a reaction at. And some of those can be quite away from price. I have been known to put orders in at levels weeks before they hit. I shit you not, weeks before they hit. Now, initially, I had planned to kick off with a regular slot called Monday's Markets. Every time I've held Edges for Ledges in the past, I've done this session, and the aim of it is to just highlight the key opportunities I'm looking at for the week ahead. So it would be which markets I'm focused on, what my biases are for those markets, where I think they're going, where I plan to do business, both in terms of getting in and of course getting out. But I realised there's such a large number of people who've signed up to this event that don't know anything, I imagine, about how I trade at all. And my way of trading might be very unique to some of you, just because I am known for entering bids and offers at levels which could get hit any time of the day or night. But how price develops as it approaches these levels is often key to whether it's filled or killed. And a primary example of that is Bund today on the short-term strategy, and I wanted to just talk through something here to just give you an illustration of a typical trade I would take, but also why I want to run Monday's markets on Wednesday this week. So I didn't trade the Bund today. It was a US holiday. I wasn't expecting a lot of activity in the Bund, but again, I'll show you very briefly now the type of analysis that you will see. I've got many different ways when I'm trading to establish bias and many different entry techniques, but here is one of them. And as far back as the end of July, this is a weekly chart for the Bund, there was a level in Bunds that I intended to just bid for a reaction, and it's nothing more complex than this weekly swing high. You can see the clear move through it on this candle, and you can see also on this time frame that there was no retest of that level when it broke out. We move up and away, and we came back into the level today. Now, when we drop down to the daily time frame here, what you can see is that price has crossed it and actually closed above it initially and then pulled back on this day and crossed back beneath it briefly and then continued moving higher. So if you're looking at the level down on the daily, you can see obviously from that cross that there has been a retest of sorts, but on the weekly time frame it's naked. The fact that it has retested on the daily doesn't put me off. I'm still prepared to bid at a level like that, but what I'll always do is come down and look at this level on the hourly time frame and see if I can isolate a point at which the level was broken and hasn't subsequently been retested. So I'll come down to the hourly and let's zoom in, because this is the point here in the price action on the hourly time frame when we crossed up and down through the level. Now you can see that price formed a little bit of congestion here and then it broke up and out, and this last swing high right there was left untested. If you've ever heard me refer to an LHPB, last high pre-breakout, this is exactly what I'm referring to. Now I come down to the 5-minute time frame. And the point at which I've isolated on the hourly that it's an LHPB that's been untested, it's also a swing high on the 5-minute that's been untested as well. So I will simply come in a lot of the time and put a bid in at that level. As far as a stop goes, the vast majority of my trades, I use the thrust candle, which is this candle here, that opened below and closed above the level that I'm going bid at. I define a thrust candle as a wide-ranging candle that has broken structure. Wide-ranging candle is somewhat subjective, but I think you know what I mean. A candle that's had a forcible break, and you can see that if you're putting a stop a tick underneath it, you're out of the way of the 5-minute structure as you buy into the hourly structure, which is very prevalent on the weekly time frame. So it's looking at this point like buying 25s, running a stop at 19s, which is a 6-tick stop. And then in terms of a target, I'm always going from one level to the next. And the next level above market is right here at 36s. The reason that that would be the level for me is the importance of it on the higher time frames. If you have a look at 36s, it was the high of this day and the low of this day here on the pullback. So now the trade is set up like that, down on a 5-minute time frame. Bidding 25s, stop 19s, target 36s, essentially risking on this short-term time frame strategy 6 ticks to make 11. So that's how the trade was set up. And the reason I'm mentioning this is if I'd held a session last night, I could have given you that trade and then just fucked off with the caveat that, well, it's a holiday, there might be some lackluster price action. But let's actually have a look what happens here. Now, the market opens and it just obviously goes very, very quiet overnight, which is pretty common, and then it starts to move lower and it starts to accelerate at the Frankfurt Open. And you could be sitting here with a bid at 25, stop at 19, an offer at 36 to take profit if you're filled, and suddenly all these variables come in. And as it starts to push down here and approach the limit where you would be bid, and again I wasn't because it was a holiday, but I'm saying if I'd set this up the night before, it moves down to where you would be bid, and things start to change. The first thing that changes for me is the dynamic around the open. If you have a look at this candle here, this is the 7 a.m. old open in Bunds before they extended the hours. This is an open drive. Now, an open drive is an open that is the exact high or low for the first 30 minutes. And there's currently for Bund a 76% chance that that will get tagged in the same session. Now, by the way, I sometimes see educators throwing stats out there that when you backtest them, they don't turn out to be the stat that they said. Rest assured, I haven't just plucked this statistic out my arse. You can actually go and test this yourself. I've been drawing Bund traders' attention to this for at least the last 7.5 years. But it just sets up a dynamic that if you get that open drive, it's likely going to revisit in the same trading session, and the vast majority of the time before 1 p.m. as well. Now, you'll see it doesn't actually tag today. 24% of the time, it won't tag it. But my point is here is that if you see that open, you've now got the conundrum of whether to follow the statistic and aim for it moving back to 52s, or you could keep to the original plan based on structure of getting out of 36s, or maybe you try and get clever and you offer out half the position at 36 and half the position at 52, or some other variable. But now you've got another problem that you face during this day, because when the market hit 25, which was the level, only 9 traded, and you're not getting a fill. That now brings in another variable into your trading. Your bid 25. If it's 25 bid, 26 offered, you see 9 trade 25, and it now goes 27 offered. Are you sitting there with your dick in your hand, or are you lifting 27s? If you lift 27s, you're going to reduce your R from 1.83 to about 1.12-ish. Are you going to just get in, say, look, it hasn't tagged my price, I'm going to pay up here, or are you going to stand firm? There's a fairly dramatic reduction in R there on a short-term strategy like this. This is where you've got to be very adept at fast forecasting, which is something I want to try and help you with. Basically, how to make a decision under pressure. In a fast-paced market, you've got to be able to assess a problem, choose a correct course of action, and then execute. This is why experience, and more importantly, way more importantly, learning from experience is key, because you're not always going to make the right decisions, but you've got to learn from them. So after you're out the trade, you can play it back and say, what would have been the right thing to do here versus what I did? And then you can follow that thinking going forward. I track a lot of things. We'll talk more about journaling, but I track different metrics for managing trades. I'll show you some later in EFL, but for example, I get filled on a trade and trail a stop, and either it hits my target or I get taken out on a trailing stop. But I know, for the way I trade, what the outcome would be over time if I got out 50% of the way to target and moved to break even. I can tell you that. In fact, I can tell you it makes money, but it makes far less money for me, for example, to take a partial and move to break even. I know these things because I've tested them. I'm very big on testing a lot of alternative ways to do things. And again, these are some of the things that I want to help you with, because this is the foundation for having a lot of confidence when you trade. And again, going back to that idea of fast forecasting. On the desk I'm on, the guys there that are executing size are able to make decisions with absolutely fucking lightning speed. And you need to be doing that a lot of the time, especially when you're a short-term time frame trader, because the market is just throwing new information at you all the time, and the decision you make is obviously going to affect your edge. So the reason I've gone through this tonight is to try and go back to the idea that I could have set this trade up last night. I said, guys, this is a trade you could take tomorrow. You could buy 25s, put a stop at 19s, get out of 36s, and then I fuck off and disappear, and I come back on Thursday and go, guys, I didn't take that trade. And you're like, why didn't you take it? And I'm like, well, because it didn't get filled, because 9 traded and I didn't want to pay up. And in other examples, maybe you might get caught in a trade that I've never even taken because I don't like the way that price trades into the level. There's a lot of things that I look at. Some of them, if you know me, you'll already be familiar with. Like, I love the market to accelerate into a level. I hate the drift of death, and a lot of the time price action like that will cause me to pull a bid that I might have had in for weeks. So all of this to say that rather than throw you in the deep end tonight when there's so many new people with just levels I'm looking at, I'm interested in buying this here, selling that there, I want to do this for you on Wednesday night, and that way we're meeting the very next morning for the live day. So you'll then get a good grounding in how, if the things I speak of set up, I'm actually trading them. And then obviously you'll have the 4th session of this week, which will be Friday, where we will review the week that was, and I'll go through the trades that I've taken in the week, the opportunities as I saw them. You'll see the good, the bad, hopefully not the ugly. So I'm with you for the next 4 weeks. I'm going to do my absolute utmost to communicate how I trade under live market conditions. And more than anything, what I want to do is ingrain in you a really solid routine for constant self-improvement. I want you to have a framework so you know your edge, so that you can understand how to simplify it for execution purposes, and ultimately how to improve your execution under pressure, how to improve your fast forecasting. So, Ledges, I will leave this here for tonight, just to answer one of the questions. So what I was talking about in Bund today, that is a typical trade that I would take on a lower time frame. And a lot of the trades that I take on my swing strategy look similar. They're not as small as 11 ticks, but they're often that same kind of R. On this trade, it'd be looking to initially risk 6 to make 11. It's a 1.83 R. But again, I really want you to see how I deal with price action when it comes into the levels, because I put a lot of orders out there, and while some of them I leave and they fill, many of them I am looking at and saying, do I still want this? And it's a hard graft, because I can have trades going off at any time of the fucking day or night. I don't work to session windows. I know that's quite popular. I know a lot of people do it, like they only trade 7 till 10 or what have you. I will have trades going off at fucking 2 a.m. UK time and getting my ass out of bed to manage them. You've probably seen that from Twitter, that occasionally I'm like, oh, shit's broken out overnight, especially when you get some geopolitical risk or something like that, and suddenly we're pulling an all-nighter. I don't conform to any like, oh, I'm only going to trade during this session. It's not a fucking part-time job here. Anyway, again, at the risk of repeating myself, Wednesday 8 o'clock at night UK. Thursday we've got 2 sessions I'll be trading live, and then Friday I've scheduled it for 6 p.m. UK, and then one more on Sunday 8 p.m. UK. Cheers guys.